Right, so we're back with another deep dive, and this time we're taking a look at the Crypto Deep Dive Market Report from January 3rd, 2025. It's basically your cheat sheet for, staying ahead of the game in crypto this week.
DeFi.
The overall sentiment, bullish, like super bullish. Market cap is way up, and we're seeing some interesting moves from, the big institutions.
Yeah, it seems like despite all the turmoil we saw, in the past couple of years, the market is actually maturing in a way. It's attracting serious investors. We're not just talking about, speculative bets anymore.
Exactly. And speaking of serious investors, let's talk Bitcoin. The report highlights this, record-breaking hash rate hitting like a mind-blowing 1,000x hashes per second. I mean, that's a lot of computing power dedicated to mining Bitcoin.
Yeah, it's a sign of confidence in the network. Think of it this way. More miners means more competition to solve these complex mathematical problems that are needed to validate transactions and secure the blockchain. So a higher hash rate basically means a more secure network, which is something institutional investors, really look for.
Oh, for sure. But the report also mentions that BlackRock's Bitcoin ETF, iUSDe, has seen a significant outflow of cash, like a record $333 million in just 3 days.
Yeah.
Should we be worried?
Well, not necessarily. I mean, institutional investors like BlackRock, they don't always move with the same short-term mindset as individual investors.
They might be reallocating their assets ahead of the first quarter, which is traditionally a volatile period for crypto. Or they could be, shifting their focus to other promising areas within crypto.
Right. So they're not necessarily abandoning Bitcoin, just maybe adjusting their strategy.
Exactly. Remember, these institutions, they're playing chess, not checkers. They're thinking several steps ahead.
Now let's shift gears and talk about stablecoins. The report highlights Ethena's push to bring their iUSDe stablecoin to traditional finance institutions. Can you explain why this is such a big deal?
Well, stablecoins, they're designed to maintain a stable value, usually pegged to a fiat currency like the US dollar, and they act as a bridge between the traditional financial world and the often volatile world of crypto. Ethena's initiative is essentially creating a more regulated and secure way for traditional institutions to, access and utilize stablecoins.
It's all about building trust and legitimacy, which is crucial for wider adoption.
But then there's Cerdic's report reminding us that even with all this progress, phishing scams are still a big problem in decentralized finance.
Yeah, it's a sobering reminder that security is paramount. Even as the space matures, these scams aren't just targeting seasoned crypto traders, they're affecting anyone who's online.
Right.
It highlights the importance of being vigilant, protecting your personal information, and, being skeptical of anything that seems too good to be true.
So double-checking everything and never sharing sensitive information online, no matter how convincing the request might seem.
Absolutely. And it brings up a bigger point. As more institutional money flows into crypto, the stakes get higher. And the bad actors will try to exploit any vulnerabilities they can find.
Right.
So it's on all of us to stay informed and protect ourselves.
On that note, let's move on to the Kwon saga. The report mentions a new money laundering charge against him, adding another layer of complexity to the ongoing legal fallout from the Terra Luna collapse.
Yeah, it serves as a reminder that actions have consequences, especially in the fast-paced world of crypto where innovation and risk often go hand in hand.
Absolutely. Speaking of innovation, let's talk about Frax Finance. They just got a massive boost of credibility thanks to BlackRock. What's the story there?
Well, their new stablecoin Frax USD is backed by BlackRock's BUIDL fund, which currently holds a staggering $648 million in assets.
Wow, that's a huge vote of confidence. But why would BlackRock choose to back this particular stablecoin? There are already established players like USDT and USDC.
That's a great question, and it speaks to the evolving landscape of stablecoins. BlackRock's involvement isn't just about providing capital, it's about bringing credibility and legitimacy to this new breed of stablecoins.
So it's more than just a financial backing, it's a strategic partnership.
Exactly, and it's not just BlackRock. The report also mentions that FalconX, a crypto brokerage, is acquiring Arbelos Markets to offer more institutional-grade trading options.
Interesting.
It's all part of this larger trend of traditional finance merging with the crypto world.
It's pretty fascinating when you think about it. Just a few years ago, crypto was seen as this fringe movement, almost a rebellion against traditional finance. Now we've got Wall Street giants jumping in headfirst.
Yeah, it's a testament to how far the crypto space has come in terms of maturity and innovation. And it's creating some really interesting opportunities for investors, both big and small.
But with all this institutional money flowing in, does that mean the Wild West days of crypto are over? Are we going to see more regulation?
Well, regulation is definitely a hot topic right now. As the market grows and attracts more mainstream attention, regulators are stepping in to establish guidelines and protect investors. This can be a double-edged sword.
How so?
On one hand, regulation can bring more stability and legitimacy to the market, making it more attractive to institutional investors. But on the other hand, it can stifle innovation and limit the decentralized nature of crypto. It's a delicate balance that's still being figured out.
So it sounds like the crypto landscape is becoming more complex,
Hmm.
but also more sophisticated.
Exactly. And that brings us back to the importance of doing your research and understanding the trends shaping the market.
Right.
For example, the report highlights the emergence of AI tokens. It's a hot topic, with some experts calling it the next big thing in crypto, while others are more skeptical.
Yeah, AI seems to be the buzzword of the moment.
Hmm.
And in the crypto world, that can mean a lot of hype. So how do we
Yeah.
separate the genuine innovation from the empty promises?
Well, it's a challenge, but there are some key things to look for. First, what problem is this AI token trying to solve? Is there a real-world application, or is it just a bunch of fancy jargon designed to lure investors?
So look beyond the marketing and focus on the underlying utility.
Exactly. And then do your research on the team behind the project. Who are they? What's their track record? Do they have expertise in both AI and blockchain technology?
So it's like due diligence for the crypto world. We need to vet these projects just like we would any other investment.
Precisely. And don't be afraid to be skeptical. If something sounds too good to be true, it probably is. Remember, the crypto space is still relatively young, and there are a lot of scammers and opportunists out there.
It's a good reminder to approach everything with a healthy dose of caution, especially when FOMO starts to kick in.
Speaking of FOMO, another piece of advice for navigating the hype cycles is to diversify your investments. Don't put all your eggs in one basket. Spread the risk across different asset classes and projects that you believe in.
So take a deep breath, do your research, and diversify. Sounds like a solid strategy. But what about those of us who are looking for a simpler approach? The report mentions some advice from the CEO of Mayor.
Ah, yes, Fred Thiel's classic advice. Buy Bitcoin and forget about it. His logic is based on Bitcoin's historical resilience. It's proven to be a solid long-term investment, only declining in value in 3 of the last 14 years.
It's a classic buy and hold strategy. And with some experts predicting Bitcoin could hit $200,000 in 2025, it's a strategy that could pay off handsomely.
Of course, it's important to remember that past performance doesn't guarantee future results. But Thiel's advice highlights an important point. Focusing on the long-term potential of a well-established asset like Bitcoin can be a less stressful approach than trying to chase every new trend.
That's a good point. It's easy to get caught up in the hype and the excitement of the latest and greatest thing. But sometimes the simplest approach is the best.
And it brings us to a crucial question. What does all this mean for you? How can you apply this knowledge to your own crypto journey?
That's what I love about these deep dives. It's not just about learning facts, it's about understanding the bigger picture and figuring out how to navigate this complex and constantly evolving world.
Exactly. And as we wrap up this deep dive, I want to leave you with this thought. The crypto space is full of opportunities, but it's also full of risks. The key is to stay informed, be critical, and never stop learning.
That's a fantastic note to end on. Thanks for sharing all your insights with us today. It's been a really enlightening deep dive.
It's been a pleasure, and remember, stay curious, stay informed, and stay ahead of the curve in this exciting world of crypto.
And that's a wrap on our deep dive for January 3rd, 2025. Thanks for joining us, and we'll see you next time for another deep dive into the fascinating world of crypto.